Good morning, listeners and new listeners. Maybe some of you are joining me today after my presentation last night at my office in Frankfurt. Welcome to Friday's episode of Capital Markets Quickie. I'm Endrit Cela, here to break down yesterday's market action. So, let's get right into it. Well, November was a month to remember for the stock market. We saw the Standard & Poor's 500, Dow Jones, and Nasdaq all notch their best monthly gains of the year. It seems like the big question on investors' minds has shifted from when rates will peak to when they'll start to drop. We see signs of caution, especially when we take a closer look at the VIX, which is showing levels which we've last seen right before Corona hit. I guess everyone seems to be waiting for something to go wrong. Okay, so now back to the Standard & Poor's 500 index, which ended the month up 8.9%, and the Nasdaq wasn't far behind, popping 10.7%. Even the Russell 2000, the small-cap index, which had a tough year, rallied about 8.8%. The Dow matched this performance, marking its best month since October last year. This rally shows that the Fed's flexible stance after their early November meeting caught a lot of investors off guard. Now, about the Fed. They kept interest rates steady at their last meeting, and the latest economic data, it's only strengthening the case for no more rate hikes. Inflation seems to be cooling down, and the job market is balancing nicely between supporting growth and keeping inflation in check. This optimism is reflected in the markets. Investors are now betting on interest rate cuts in 2024. Market forecasts show a whopping 92% chance of a rate cut by the end of next June. Lastly, let's talk sectors. Interest rate-sensitive ones like real estate and technology led the gains, each up more than 12%. Financials and consumer discretionary sectors weren't too far behind, each rising more than 10%. Alright, that's it for today's market recap. I hope this quickie keeps you up to speed. I'll catch you next week with more updates. Until then, keep investing smart.